In the heart of Copenhagen, there's a building you can't miss. Danske Bank, Denmark's largest bank, has stood for over a century as a symbol of Scandinavian integrity, transparency, and trust. But between 2007 and 2015, something went terribly wrong. Behind the polished marble and spotless balance sheets, there was a money laundering operation so massive, so sophisticated, that it shook the entire European financial system to its core. This is the story of how 800 billion euros in suspicious money slipped through the cracks of a system meant to protect the public and ended up in the hands of criminals, kleptocrats, and oligarchs. It all centered around a small, almost forgettable office in Tallinn, Estonia. Just a branch of Danske Bank, nothing fancy, nothing flashy. On paper it looked insignificant. But beneath the surface, that one branch was processing hundreds of billions of euros, money flowing in from Russia, Latvia, Azerbaijan, Cyprus, and more. Clients showed up with briefcases, shell company paperwork, and meticulously crafted contracts. But they weren't there to open savings accounts. They were there to move money, a lot of it. By 2013, the Estonian branch had become a compliance black hole. Internal warnings were brushed aside, audits got manipulated, employees who tried to speak up, silenced or pushed out, and the money just kept flowing. A leaked whistleblower report would later call it the bank's dirty little secret. From 2007 to 2015, an estimated 200 billion euros in suspicious transactions went through the Estonian branch, most tied to offshore companies with no real owners, fake businesses, or UK-registered shell firms. But that was just the tip of the iceberg. A joint investigation later revealed the true suspicious flow could be closer to 800 billion euros. That's possibly the largest money laundering scandal in European history. Most of the cash originated from Russia and states of the former Soviet Union. It moved through complicated networks. Cyprus, the British Virgin Islands, the UK, funneled through layer after layer of shell companies. Investigators traced these flows to organized crime, corrupt officials, and the infamous Russian laundromat. Dozens of European banks were involved, but Danske's Estonian branch, it was a key gateway. So how did this happen in one of Europe's most heavily regulated banking systems? Plain and simple, willful blindness. Internal memos warned senior management in Denmark. Estonian regulators raised red flags. Whistleblowers begged to be heard. But the profits were just too good. Danske Bank raked in millions in fees from these shadowy clients. And, according to leaked emails, executives chose not to act. The fallout was explosive. In 2018, Danske Bank's CEO Thomas Borgen resigned in disgrace. The Estonian branch was shut down. The head of Estonia's financial supervisory authority stepped down. Multiple countries launched investigations: Denmark, Estonia, the UK, France, the United States. Billions in fines followed. Danske Bank pleaded guilty in the US to fraud and conspiracy to commit money laundering. They agreed to pay over $2 billion in penalties. But even now, the full extent of the scandal may never be known. The money is gone, dispersed across offshore accounts, converted into luxury assets, hidden in plain sight. Authorities believe some of that laundered cash was used to buy London real estate, fund corrupt regimes, evade sanctions, maybe even influence foreign elections. The Danske Bank scandal didn't just expose one bank's failure. It exposed a system-wide vulnerability, a weakness in global finance that lets criminals move fortunes across borders with the click of a button. And the question remains, if 800 billion euros could be laundered right under regulators' noses, how much is still flowing today?